Hello, everyone. Today, I would like to talk to you about three great companies, dividend companies that you could invest in, and you could depend on the dividend payment for a long time at least. The first one right off the bat is Ares Capital. It's a business development company specializing in acquisition, recapitalization, mezzanine debt, restructuring, rescue financing, and leverage buyout transactions of middle market companies. It's quite a solid company. As you can see here, the balance sheet looks pretty good. They got a 7x PE ratio, and the balance sheet, as reported on March 31st, looks pretty good. Revenue is looking very good. Earnings promising. And the forecast, as far as share price and fair value is concerned, is basically 32%. This is just algorithmic. Of course, we cannot really depend on that kind of forecast. This is just based on their numbers and balance sheets. What is very interesting is that they've been paying really good dividend, guys. 9% dividend yield for the company. So the next ex-dividend is actually very soon, 14th of June. Could be a great opportunity for those who are interested in dividend yields to have the stock in their portfolio. And as you can see here, the ownership of the company also is 70% general public, 28% institutions. And looking at the top shareholders, where you see Morgan Stanley, Van Egg, Merrill Lynch, these are great names to have basically as Wells Fargo, as you can see here, good institutions to have as your support. So that's just some information about the company. Let's go ahead and take a look at their chart, guys. The chart looks quite interesting, but I have to also tell you that there will be a correction coming up very soon. As you can see, this red line is an ultimate, very difficult support line. Resistance line, and I don't think it will be broken very easily. We are right now walking along the trend and the channel. The question is, how far can we break over this channel? I think yes, because our ex-dividend date coming up. But I think we cannot break through this channel very easily. We will play along in this range, 22 to 20 dollar range, and potentially we could test again this bottom channel right here, of course depending on what kind of news comes out and what's going to happen after they pay the dividends. Obviously they will go for a correction, but again, let's say $17 to $21, that's something, if you have capital in cash, I think it's worth it to basically repurchase the stock as it goes down. It's a solid company. It's good to be in your portfolio, and the dividend payment's quite solid. The next company you got to have in your portfolio as a dividend company is Dow Incorporated. So what do they do? Through its subsidiaries, engages in the provision of various materials science solutions for packaging, infrastructure, mobility, and consumer applications in the United States, Canada, Europe, and the Middle East, Africa, India, Asia Pacific, and Latin America. The company is really solid. They've been in the market forever. For a company with quite a big portfolio, I think the balance sheet looks okay. The market capitalization is $40 billion. P/E ratio is quite high, so there could be a correction soon. You see a $43 billion revenue, a $1.2 billion worth of earnings. That gives you a net profit margin of 2.73. Like I said, this is a dividend stock, so you should not compare it to stocks that are value or tech stocks even that give you, 12, 13, 14% net profit margin through the quarter. However, we do see a 50% undervalue. Again, you cannot really depend on it, but it's a good thing to see that algorithmically we are undervalued. Another good news about the company is that their debt to equity ratio is quite under control. As you can see here, at times of high interest rates, it's very important for the companies to have a good control over their debt. That is totally under control. And last but not least, they pay you a 4.8% dividend yield, which is quite lofty, I would say, for such a size of a company. And definitely you need to have them in your portfolio. Looking at their chart, again, the chart is very interesting for me in the sense that you see that we've had really major runs as far as, post-COVID Corona is concerned. Right now, we are keeping this orange moving average. However, we have one very, very strong major resistance line, and that is exactly here, let's say $59 range. And anything over that range is, for now, air. So we are not interested in exactly in this. This same story happened before and was immediately corrected. We do have a good support line right here, 56, and potentially this support line could extend all the way to 49, just in case of a market drop. So if we lose grip of $56, would not really matter. Again, it's a good range for those who are interested in dividend companies. They can very easily repurchase and rebuy and average themselves out. I highly recommend this company. And the last company that I would like to talk about is Altria Group. Through its subsidiaries, manufactures and sells smokable and oral tobacco products in the United States, guys. Probably you know the company. It's a dividend giant. Look at this balance sheet. Its PE ratio is quite good, 9.2. Very fantastic earnings. The net profit margin is 40%, which is fantastic, and humongous revenue being generated in the previous quarter. Obviously, the stock is totally undervalued too. That's what you want to see with dividend companies, by the way. Undervalued companies that pay good dividends. Therefore, you have a chance of making money on your capital, and also you have a chance on getting good cash flow through your dividends. What is quite worrisome to me is their unbelievable debt margin. Look at this company's debts, guys. That is not a good sign. We don't want to see that. And look at what's this doing to its equity. That is not a good thing. So they should really reduce the debt. Maybe you can go deeper into the company and see what causes that debt. But the dividend payment is quite lofty, 8.6% dividend, and their next dividend payment is the 10th of July. Ex-dividend is 14th of June. Be careful there. So in 3 weeks, let's say more or less, is the ex-dividend. 10th of July, they already pay. What is comforting is that a big chunk of the company is owned by institutions. So that means you see a more logical pattern towards the trend of the stock. 61.5% is owned by institutions. And you got all kinds of heavyweights from Vanguard Group to BlackRock to State Street Global Advisors to Capital Research and Management to Charles Schwab. You name it, Morgan Stanley, they're all listed here. And almost every company, to Goldman Sachs, almost every company is interested in Altria. Let's take a look at their chart performance. Well, the story with the company is actually threefold. Well, first of all, you see this green line is a very strong support line. So I don't think that's going to be broken anytime soon or so easily. However, having passed that, the company will have three major resistance lines, guys. We've crossed over the first resistance line right there. The price right now, they close at 45.49. The major resistance line is right here at 48, and then if we can pass through that, we're going to be stuck with 53. However, the company has had great performances. We had a $77 hit back in 2017. You should also know that the number of smokers worldwide is going down. That is not good news for the companies that produce tobacco and byproducts of tobacco, but at least that's good news for people who want to stay healthy, and I hope they do. As far as chart is concerned, we will have to see how the company performs hitting these resistance lines. I think hitting the first resistance, or let's say the second resistance line, should not be a big problem for them. Post dividend payment, let's see what happens to the market, and then we can decide. But should you buy the company now and keep them in your portfolio? Definitely as a dividend stock, and then see how the company trends and potentially repurchase them. On that note, I want to thank you and wish you all a great week. Bye-bye.